afternoon. You're watching Business World Live. I'm Danie Laurel. Okay, guys, what a devastating day for the index as we collapse to 6612.62. That's down a painful 3.5% this Friday afternoon. That caps off trading for January down 7.4% year to date in just 1 month, 2021. This has been the steepest decline we have seen since March of 2020, and this comes on the back of overseas investors selling the most Philippine stocks we've seen in 2 months. So we lost 3.1 billion pesos today. That's 11th day of consecutive trading days of net foreign selling. So you can see on my terminal here how a huge part of that sell-off actually happened towards the end of the day of the market close. I'm just going to pull out the sectors here, which ones were the ones most in pain, albeit, of course, you can see in my terminal, everyone was feeling the pinch, but holding firms, most importantly, slumping by more than 4%, followed by industrials, almost the same pain there, but really not anyone spared from the carnage. The best, so to speak, or least hit sector were the banks. That was down by 2.6%. Now I'm just gonna take a step back and take a look at the movers, especially when you're looking at these things, you're trying to understand which ones were really dragging down that index, and you can see here a very mixed picture of what was happening today. You can see, for instance, a bunch of those that sat out the sell-off as Bloomberry, Security Bank, AGI, First Gen, LTG, and Emperador. So apart from LTG and Emperador, which are from the same parent at least. Sin stock, so to speak. The others don't necessarily have anything in common. So looking later on Chris Mangun on why this is, why they are jumping this morning. Is there anything behind that fundamentally? Meanwhile, you can see the pain that's been felt in JG Summit. That's down by 8.2%. I mentioned that holding firms were the worst hit. JG Summit, AEV. These are also some of our biggest holding firms. Now, one that I do need to check in on is BPI and how that closed. Not surprisingly, since this morning, it had already been dropping after it had reported its net income for the fourth quarter. Now, recall that we are expecting more of those fourth quarter income to be trickling in, and we had reported that earlier this morning. The 2020 net income was 26% lower year on year. That is at 21.4 billion pesos. And not only was it lower, it's also lower than the 22.18 billion peso average, which 17 analyst estimates compiled by Bloomberg were expecting. So not just a decline of double digits, 26% for BPI, but nevertheless even worse than what analysts had anticipated. And you can see that closing down by 4.5% to 79 pesos and 45 centavos. Now, other big losers today were Aboitiz Power, that was down by 6.8%. Meralco falling the most in 9 months, down by 3.6%. AEV more than any loss since December 21. But as I mentioned, AGI rising the most in 14 weeks and bucking the sell-off that had risen by as much as 7.1% this morning. Now, I just want to pull out a couple of bright spot stocks here just to show how, it's not everybody that had felt this pain. You can see, for instance, two tech players, so to speak, that's Certec and IMI actually gaining. Tech, for instance, up by 4%, IMI up by 4.7%. Now, this comes as I had actually hosted the SAPI GMM for the first quarter just this morning. And we had with us there, of course, Dan Lachica of SAPI, Glenn Everett, who is also the chairman of SAPI, but among them, Ralph Recto, Senator Ernie Pernia, and also the president and CEO of LPH, or Lopez Holdings Group, Piki Lopez. Nevertheless, according to SAPI, new technologies may help boost the Philippine electronics exports, and they said that they are seeing signs of improvement in exports this year. They did mention that the demand for new technologies are actually emerging because of the COVID pandemic. They said that the pandemic and even the stay-at-home orders has increased the pace of new technology development. They're predicting electronic exports exports to increase by 7% this year. So they have not decreased the forecast. That was a forecast that was made on November. They're still banking on the expected recovery in demand for semiconductors. So more on recovery and, not just for the export sector, but the economy as a whole. You've actually got Economic Planning Secretary Carl Kendrick Chua saying that the Philippine economy may only start growing in the second quarter of this year. This will be a slow start to the year. We will be ramping up by the middle of the year. Now, meanwhile, another thing to be watching out for is whether the sentiment will be better given that the Philippines will now be lifting on February 1st a travel ban, which was, of course, imposed on more than 30 nations as a safeguard against the new COVID-19 variant. This is according to spokesperson of the palace, Harry Roque. So foreign nationals are now allowed to come back in, but they will need to pre-book hotels and quarantine for 7 days. And, as we have already reported, GCQ will be maintained in Metro Manila throughout February. And finally, just want to watch out for here, IPO watch. You've got Lucky Me. That is, of course, a famous noodle maker, Monde Nissin, saying to weigh in a 1 billion peso IPO. And if that does happen, that would be the biggest ever. This is published by Bloomberg. They're citing sources of people with knowledge to the matter. Apart from Lucky Me and instant noodles, Monde Nissin also does the meat alternative called corn over in the UK. So they've been discussing plans, and the company is aiming for a listing as soon as this year. That's said by one of the people cited. And if that does happen, that would be joining the National Grid Corporation of the Philippines, also seeking an IPO this year, also to the tune of $1 billion. So here to chat with us more about these markets and more, we have with us Chris Mangun of AAA Equities. Good afternoon, Chris, and welcome to the broadcast.
Good afternoon, Danie. Yes, thank you for having me.
Chris, I don't know if it's a good afternoon or we can really say TGIF. Quite some pain here. What is going on?
Yeah, well, I mean, this is going to turn out to be one of the worst weeks that we've had in the last few months. The PSEI is down is down more than 6% for the week and more than 7% for the month. So I think we had a big, massive trigger of panic selling right at the close, right at the runoff period. We saw massive foreign outflows, like you said, specifically on the holding companies. You see JGS hurt the most, down I think more than 15% for the week. I think that has something to do with their rights offering on Cebu Pac. The dilution of those shares, and basically, I don't think investors are happy that that a big chunk of that rights offering is going to go to pay off its parent company. So JGS has led the losses in the holding firms, but more importantly, I think investors are beginning to unload some positions to take new positions. We believe that in order for this market to go higher, other battered indexes like property and banking have to start picking up. Most of the gains from last year were due to the advances in the conglomerates, large cap conglomerates, which were a safe bet because of their diversified portfolio. It was really tough to pick a specific industry other than your defensive issues, mainly those in the utility. But other than that, the holding firms were the way to go last year. So I think investors are taking closing positions in there, and I think we're going to see them reposition themselves in the coming weeks.
Chris, is there any support level that you're seeing now, especially since GDP results were reported yesterday at 10 a.m. and so you had already expected that to be a sell-off to happen since it was lower than expected. But why is it still continuing on today?
Well, if you look at what happened yesterday, I think investors were pretty. I mean, I think investors expected GDP figures that came in yesterday. I don't think it's worse than expected. I think it was right at expectations. Honestly, I was looking at an even worse contraction for the month of December. There was some optimism because of because of the pickup in manufacturing back in November and October, which helped GDP. But ultimately, the drop in manufacturing in December pushed GDP lower, and I think that was pretty priced into the market already. You even saw the market go up moments after GDP was reported yesterday. Now, today's losses, I think this is just more investors getting out and moving to the sidelines. We've been seeing this trend for the last 3 weeks. If you look at how the market has moved in the last 6 to 8 months, we've really been seeing spikes in optimism. You'd see the market go up really fast and then would taper back down as investors were reminded of reality. And I think that's what we're seeing again.
Mm-hmm.
So there's still a lot of uncertainty out there.
Mm-hmm.
Some
Chris,
are expecting, yeah, go ahead.
yeah, what about the fourth quarter earnings? Does this have anything to do whatsoever with BPI? You know, one of the is the first blue chip really to have reported, or have investors shrugged off or forgotten already what the fourth quarter 2020 was supposed to be like, and are now focused on the future? Do the earnings still have any impact?
That's a very good question. I don't think investors are looking at earnings anymore. How could you be looking at earnings, especially for last year? I think the fundamentals of it just doesn't make sense anymore. I mean, if you were to go with the earnings, you wouldn't be in this market at all, right? So I think invest earnings are going to be important this year. How fast these companies can recover is going to be a big deal. But fourth quarter earnings to me, this is just you can't make a comparison or any earnings last year. You can't compare it to the year before, but you also can't rely on it
To
to give
predict,
you a valuation of where these prices should be. Now BPI,
right?
it may look bad that the earnings are down so much for the fourth quarter. I mean for the whole year, but honestly, the reason why is because they had to move so much into their buffers for potentially higher NPLs. Now
Okay.
they've been doing that the last couple of quarters. I think that's going to strengthen their position uh, for future uncertainty. I mean, if they don't see those NPLs go through the roof, they're going to have all that extra buffer, and overall, those companies are still in good shape. Now, there is going to be some negativity from investors and some pessimism,
Mm-hmm.
and you may see the stock move lower. And ultimately, in my opinion, that's gonna give a better entry for investors because once the economy begins to really recover, you're gonna see prices go higher as well.
Chris, are you excited for possible listings this year, or is that something too risky to be betting on at the moment? You've got Monde Nissin's IPO, you've got the NGCP, although they've mentioned that for a while now that they were going to IPO at one point. But to what extent is there even appetite for these sort of listings?
Yeah, well, after Converge's successful listing last year, despite the conditions, I think there's some optimism in fundraising in the market now. You have two of the biggest IPOs coming. You have first of all the National Grid Corporation, which has been delaying listing their shares for the
Mm-hmm.
last I think 3 or 4 years now, and that may come into fruition this year. And another one that was announced today was Lucky Me. Now that's a company that's been successfully doing business here for 45 years.
Did they
Very
do well
profitable
in the
company,
pandemic,
and
Chris? Do you think they did well in the
well,
pandemic?
most of the food manufacturers, even URC, did pretty well in the pandemic. So I don't see any reason why they didn't either. I mean, their products are basically household commodities, basic needs. So I think I don't think they were hurt as much with the pandemic as others. Now, what I'm really interested in is the REIT offerings this year. There's
Okay.
supposed to be four REIT offerings, and those REIT that REIT vehicle is a lifesaver, even with these uncertain conditions. That the fact that they're going to be giving dividends On top of that price appreciation, that's going to be really attractive to investors. So, yeah, we'll see how it goes. I hope these companies do end up on the PSE, especially with the new listing rules that they have. It's going to
Okay.
be interesting to see this market grow.
Okay, so still some optimism there, especially looking at these newcomers this year, as of course our usually diversified conglomerates suffer the biggest brunt this morning. Thank you so much for those insights. It was Chris Mangun of AAA Equities.
Thanks.
Checking in on the other headlines we're keeping our eyes on, NEDA is backing the Agriculture Department recommendation to impose a price cap on pork to prevent a potential spike in inflation. The agency also supports the proposal to increase the volume of imported pork for lower tariffs as another option to rein consumer price increases. NEDA Acting Secretary Carl Kendrick Chua says the Tariff Commission is set to conduct consultations soon on the matter. The DA proposed an executive order to President Duterte seeking a price ceiling for pork and chicken in Metro Manila for 60 days. The department also wants to triple the volume of imported pork products to 162,000 metric tons in order to lower tariff charges. Mindanao may soon have its own wholesale electricity spot market by June. That's according to the Independent Electricity Market Operator of the Philippines. The group said the Energy Regulatory Commission approved the implementation of the spot market in Mindanao, as well as new designs for scheduling and dispatch intervals in Luzon and Visayas. The group said it is still in the process of registering Mindanao-based facilities in the wholesale spot market. Some 18 facilities out of 87 expected participants have so far registered, and they hope to finish registration within the first quarter of the year. The group noted the continuous drop in market prices in the last quarter due to the declining rate of customer transactions compared to the same period in 2019. Dredging works at the Cagayan River will begin next week. The works will start with the removal of sandbars, which have been constricting the waters and have been contributing to the perennial flooding problem. Environment Chief Roy Simatu said the dredging is the culmination of weeks of planning and detailed coordination to ensure that each of the equipment is safely transported to sandbar sites. The river overflowed in November when Typhoon Ulysses hit parts of Luzon. Brown water from the river had submerged villages and towns in Cagayan province. And those are the biggest news stories this trading day, January 29, 2021. Catch Business World Live again. That's Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Danie Laurel, and we are One News.